Michelle McCory, who runs part of my YouTube channel, had Judy Shelton on again. I had her on 6 months ago, but she said the same thing to Michelle, that in no uncertain terms, she believes, according to what Trump told her, that we will peg the back end of the bond market to gold July 4th of next year, the 250th anniversary of the country. So let's put it all together. So if you have synthetic demand created through the stablecoin movements by everything has to be backed by short-term U.S. treasuries, and then that pushes rates down, gives demand to the treasury synthetically to run the government, and the proceeds of those things go to gold, which raises it synthetically, and to Bitcoin. At the same time, you now peg it to the back end of the bond market, the 5, 10, 20, 30, and even 50-year treasury. What does that do? Number one, it keeps rates low to stimulate the economy synthetically and gives synthetic demand for the U.S. Treasury. It takes all of that extra money and puts it towards gold and Bitcoin, devaluing the dollar, giving us the ability to slowly pay down our debt using Bitcoin. But now if you take gold and back it to the Treasury market on the back end, you have zero upfront borrowing costs. You bring back your manufacturing at zero upfront borrowing costs. Yes, you have to pay it in gold in 20 or 30 years. Okay, fine. But the upfront borrowing costs are pretty much mitigated to zero. Bringing back your manufacturing, reshoring it, making all the new facilities that you need to make at zero upfront borrowing and selling your goods into a massively devalued dollar.
Andy Scheckman says silver is entering an explosive phase. It recently hit $54 before correcting to $50, which he sees as a short pause. He warns of major shortages at the LBMA, COMEX, and Shanghai, with rising demand from industries, investors, and central banks. The U.S. has declared silver a critical mineral, and China has tightened export controls, proving its global importance. The LBMA trades up to 800 million ounces daily against only 150 million in real supply. Nations like India, Russia, Saudi Arabia, and China are aggressively stockpiling silver. Gold is also surging near $4,100, with big institutions like Morgan Stanley now advising 20% portfolio exposure to gold, showing a major shift toward precious metals as strategic assets. Thanks for watching. Subscribe to Fine Metal for more updates.
Look, that's not conspiracy anymore. It is actually in the Genius Act and says in 2026, they will revalue gold. Now, they could market to market, or maybe they go much higher. James Rickards is saying 24,000. He gets there by dividing the money supply into gold. Not sure exactly how he gets that calculation. It was a while ago when I listened to what he was saying, but the point of it is, you put gold at that level, it benefits every central bank on the planet, but it massively devalues the dollar. That's the point. The dollar in relation to gold would fall tremendously. And that alone would give us the ability to start selling our product to the rest of the world at a devalued dollar, giving up on the reserve status in order to reshore manufacturing, in order to have the ability to grow our way out. We are at a point in time, Jesse, where 60% of this country has a literacy rate below a 6th grade level. I'm not trying to be anything other than honest. Either many of the things I say, people could say I'm stupid for saying them, or maybe I just have the courage to say what I believe. And I have been saying this on your show for a long time. This is confirmation of what I've been saying. The fact that the U.S. just named silver a critical mineral, along with China's tightening exports, there's no coincidence there. This is governments recognizing, I think, silver's strategic importance. Go back a year or two, Canada, many of the miners and players in the silver market in Canada tried to do the same thing, to have it reclassified a strategic metal, not an industrial metal. But this is an understanding, an awakening. It means a floor has been put under demand, number one. You have policy-driven buying now that will be coming in from the U.S. and from other countries like China, who will see that this is musical chairs, if you will. And at the same time, you have a global supply crunch. You got players getting squeezed. And you get China, who is, a big player in the silver market, limiting exports. Yeah, that's a big deal. Now, silver isn't just an industrial metal anymore, Jesse. It's obviously it's strategic, and it's monetary. It's essential. And I think now that governments are making that official, I think from the highest levels, maybe governments just lit the fuse. So yeah, I think it's a big deal. It's a huge deal, bigger than just about anything I've seen in a long time in the silver market. I think you point to the growing shortage of physical supply at the highest levels, the LBMA, the COMEX, and now even the Shanghai market. They're all showing stress, if you will, in supply, and the amount of, or the number of deliveries is off the chart. And coupled with, surging demand for things like industrial investment, central banks, sovereign wealth, the same stuff we've been talking about forever, man. Silver is being pulled from every direction. That's just the bottom line. And not enough talk about it anywhere except on the alternative media channels, so it doesn't gain any traction. But where you will start to see some traction, in my mind, is the fact that the U.S. government just designated it as a critical mineral. And to me, this changes the narrative. Silver is no longer just a commodity. It's a matter of national security, national strategy. And when you talk about the kind of potential that silver has, remember that in terms of market cap, it's the tiniest little nothing market. And when capital begins to flow in, like the United States government and the sovereign wealth funds, it doesn't move gradually. It will erupt at some point. I do believe that. But the bottom line, Jesse, is you got tight supply, you got surging demand at the highest levels, coupled with systemic risk and the LBMA and what could happen if we see a delivery failure, coupled with official recognition. I would say silver isn't just poised to move, it's ready to explode. And yeah, it has been catching its breath. And anything that moved that fast, 40% in a couple of months, is overbought. That's the definition of overbought. And it needed to correct. It did. And here we are back above 50 again. So yeah, I say buckle up for what's coming next. If I'm going to guess, is to reshore manufacturing. And the only way you do that is to massively devalue the dollar. Look at Triffin's dilemma, which says as the world reserve currency, you will always be have a net deficit in global trade because your major export's going to be dollars. The world needs more dollars than we can provide through trade alone. And so countries over time have to sell their currency to buy ours, weakening theirs, strengthening ours against those currencies, that is. And so over time, manufacturing flows to where it can be produced the cheapest. Vice President Vance has come out on White House letterhead saying, no, we can't do this anymore. Triffin's dilemma, it has been a subsidy for the consumer. It's been a massive hindrance for the producer. It's a broken system. We have to move away from it. Even the knucklehead that was Jared Bernstein, a true knucklehead, if anyone remembers him trying to explain how treasuries were created, he was the White House lead economic advisor under the previous administration. He did write a report called Dethrone King Dollar, where he says the same thing. Being the reserve currency is now a hindrance rather than a benefit. Now, if you are trying to bring back manufacturing, you have to have a weaker dollar. How do you get a weaker dollar? You let gold go to levels that no one can imagine, and I think you will see that. Now, you could argue Bitcoin too, but take a look at USA Tether as an example. USA Tether, which is already Genius Act compliant, their CEO is a man named Bo Hines. Bo Hines was Trump's crypto czar until August. So the rules that Bo Hines was creating, he is now benefiting from. What is Tether doing? They have 12 billion in gold right now, more than they have in Bitcoin. About 8 billion they have in Bitcoin, according to their last numbers that just came out. They were just at the Beaver Creek Mining Summit as a company. Tether was, which is one of the biggest mining summits in the country. Again, talk about Chinese disintermediating the market. Now, Tether is. So let's just play this out. The Genius Act says that any time, and to your point, I think they are using the cryptosphere, if you will, to get to where they want to go. And I know that sounds kind of crazy. I mean, it's like, here's how it works. So anytime money moves, it'll be backed by a stablecoin. It will move instantly, like Venmo or Zelle across a blockchain network, instant settlement, if you will, and it will be backed by U.S. Treasuries. Now, the interest on those Treasuries is not transferable to the holder of the stablecoin. In other words, Tether gets to keep that interest. What are they doing with it? Well, they're buying more gold than they are Bitcoin, but they're buying Bitcoin too. Now, if you realize that Bo Hines is in this and kind of an advisor, what if they've worked out a deal with some of these stablecoin holders? Say, here's what you're going to do. Anytime a dollar moves across the globe, you're going to back it with U.S. Treasuries to lower the rates synthetically, not organically. You're going to do that. And then you're going to take the proceeds and you're going to buy Bitcoin to someday maybe pay down the debt. And you're going to buy gold, not to let gold go much higher just for the hell of it, but because rising gold devalues the dollar, right? And makes exports more attractive. Now, you mentioned backing U.S. Treasury, no matter what. It's very true. David Jensen does a masterful job of showing that. But in essence, they're trading, 700 or 800 million ounces a day in London. 2 billion a day if you add the COMEX and the Shanghai market. But in London, 700 or 800 billion ounces a day with a float of 150 million ounces. What could possibly go wrong? And so, yes, they are. And I mean, you can simply say the silver inventories are extremely thin, and the pressure is accelerating. It'll be much greater if China and potentially the U.S. curtail exports. Part of naming silver a strategic element is that the U.S. can now very easily, the president can restrict and curtail exports. And this sets the stage for a potentially explosive reaction if demand or the systemic stress accelerates. What is the systemic stress? It's if one of these banks in London has a failure to deliver. And it's not just the silver market. These banks are connected to everything financial. And so you would expect to see a contagion, a systemic reaction reverberating through all markets. But yeah, I mean, the truth of the matter is London has been exposed as far as I'm concerned. And they're hanging on by a thread. There's exponentially more demand than there is supply, and there's exponentially more contracts than there are bars. That is a powder keg waiting to happen. At the same time, the public has its largest allocation to the stock market in history, over 54%. The largest amount of margin debt, 1.4 trillion. It went from 1 trillion to 1.4 like that. And also the largest exposure to options. So you have mom and pop all in on stocks, all in on margin, and all in on leverage with options. At the same time, the big money's moving away. At the same time, you're seeing massive deliveries on COMEX. Now, these are people that are incredibly sophisticated and are trading in billions upon billions upon billions upon billions of dollars every week or month into COMEX. I don't care what argument people want to make. The people at that level that are bringing in that kind of metal, they don't do things, pardon my French, for shits and giggles. They have all of the information. They know what's coming. And isn't it interesting that as we become a net exporter of gold, that gold, even with its pullback, is up north of 50% this year, an asset that pays no interest. But who's been accumulating it all? Not only the most well-funded traders in the world, the most well-informed. I've been screaming this. You can't look at the mainstream media and base your conclusions upon a faulty narrative where all of the media outlets are controlled by 4 companies. Instead, look at what the biggest money in the planet is doing. And yet, there has not been one mainstream news article about all the gold and silver coming into COMEX. I have yet to see anyone talk about it, or any Jim Cramer or any of these so-called experts. Why isn't anyone saying, why has the United States imported billions upon billions upon billions? Oh, that's right. We've been doing that with silver too. And we did just reclassify it a critical mineral. Maybe the insiders knew what was coming. My point to you is that the insiders are always positioned well before the herd. And we've seen it for years now with gold. You're beginning to see it now with silver, with copper, with everything.